something else that is looming large is the possibility of an economic recession. Why? Well, there is a string of gloomy economic forecasts that are raising alarms about the chances of the economy tanking. Goldman Sachs said the probability of a recession in the next 12 months has jumped from 25 to 30%. Moody's Analytics now pegs the odds of a U.S. recession at just below 50%. Now, those fears are being driven by the oil shocks that are caused by the war in Iran, especially the near closure of the Strait of Hormuz, which normally carries about a fifth of the world's oil supply. And in fact, today, the price of Brent crude, so that's the global benchmark for oil, topped $115 a barrel. That's about a 60% increase since the war began. And the impact, though, goes a lot further than the price of a tank of gas. What do I mean? High oil prices drive up the price of consumer goods. That's everything from milk to makeup. And when consumer prices go up, consumer spending, which powers most U.S. economic growth, goes down. It's bad news for the economy. If that's not enough, you have the rise in prices that may boost inflation, which could spur the Federal Reserve to increase interest rates. That may possibly tip the U.S. even closer to a downturn. Now, here's the good news, okay? Sort of. Jerome Powell, the chairman of the Federal Reserve, he gave nervous investors a bit of relief when he said that the Fed is taking a wait-and-see approach to raising interest rates because oil shocks like these, quote, tend to come and go pretty quickly. Though, of course, this all depends on the outcome of the war, right? And more importantly, how much oil is able to flow through the Strait of Hormuz. And you heard what Jessica said earlier about maybe the president's going to move forward without it being fully reopened. So you have some variables that could work in the United States' favor too, but again, this unpredictability. So to give you an idea of that, by the way, you look at the stocks today, they were mixed on the heels of all of this news. So the bottom line is, are we headed for a recession? What do you need to do to prepare? Who do I have with me? I'm so excited. Dr. Chris Clark, okay, professor of economics at Washington State University. We're lucky to have him because he's a very popular guy. More than 150,000 followers on TikTok alone. What economist do you know that has that following? I don't know, but we have you, doctor. Thanks for taking the time. So, are these...
Well, thanks for having me tonight.
You got it. So, are these projections correct? Are we headed toward a recession? Because the other hand is, isn't America a resilient economy?
Right. Well, I'll start off by saying this. Nobody knows how to predict recessions. Of all the things we've learned about the economy in 200 years of research, predicting the next one is always pretty tough. But I think it's safe to say the risk is elevated. This level of uncertainty with the war, is it going to end this week? Is it going to end months from now? That's not certain. But you bring up a good point with the second half of your question, is that America is a net exporter of oil. So while families are feeling the pain at the gas pump and the fertilizer that's coming out, that's not coming out of the Gulf, is not coming to the farmers. It's going to raise food prices. But on the other hand, oil companies are benefiting from these higher prices, and those oil companies are part of the United States economy.
When Jerome Powell says this wait-and-see approach, and we always are looking at interest rates, what does that mean exactly? Like, what are they looking out for? What do they determine?
Yeah, so the Federal Reserve has pretty blunt tools. I mean, raising the interest rate or lowering the interest rate, this is the base interest rate for the entire economy. That's going to affect mortgages and loans and businesses. They can't make this move nimbly. And if you get a real quick rise in oil prices, and then that's it, and the war ends quickly, the Fed is not the tools you want to use to stabilize the macroeconomy.
What are the things that might help here? Is it the idea of, okay, the war ends tomorrow? Is it, the Trump administration announcing a release from the Strategic Oil Reserve, the easing on sanctions on Russian oil? Are these all factors that may help stave off a recession? Are these things we should be looking out for?
Most of those moves, the reserves, they're not that large compared to how much we produce at a global level. I mean, globally, we make 100 million barrels of oil a day, and our total reserves are like 4 to 5 days worth of global oil supplies. The biggest thing that would help prevent a recession and restore balance in the markets is to end the war as soon as possible. Yet, even if we still do that, it would take weeks, if not months, for the oil prices to return to normal.
So now that everybody has heard you and they're fixated on everything you said and they're fascinated with everything that you said, I would love to be in your class. Now everybody's saying, okay, doctor, what do me and my family do? How do we prepare for the potentiality of a recession? What should we be thinking about? What should we do?
Yeah, this is always a difficult question to answer. I mean, on the one hand, of course, increase your savings or make sure your resume's polished and you're in good favor with your boss. But on the other hand, if everybody in the economy starts saving and stops consuming, that's going to cause a recession in and of itself.
Good point.
As Roosevelt said, we have nothing to fear but fear itself because fear alone can cause a recession.
Now I'm going to give you the $1 million question. I don't even know that's the right answer. Here's the question. What are signs that a recession would be happening? I mean, when would it happen if all the markers go there? And what would a recession look like compared to past recessions?
Okay, those are some good questions. Right now, we don't have signs of a recession happening today. But what we would start seeing is businesses would slow down their investment because they're scared to expand their production. We would see inventories start to rise as consumers stop buying things. And if inventories are higher, businesses aren't going to build as much or produce as much in the next quarter. We would see layoffs start rising. But right now, so far, our layoffs are historically healthy.
So here's what I'm going to say, because this is Jesse Weber Live. I have my name on the mug. You have an open invitation to come back here to talk about what we can expect. I loved having you on. You broke this down so easily for us to understand. I can understand why you have such a big following, but this is a good way to put it into context. So, Doctor, thank you for taking the time. Really appreciate it, and we'll be on the lookout for what happens next.
Pleasure being here tonight. Thank you kindly.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.